Welcome to this week's weekly market view for Monday, the 18th of November 2024 to Friday, the 22nd of November 2024. My name is Vishal. Let's get started. All right, so let's start with the Nifty analysis and let's begin with the daily chart. What we see right now on the daily chart is that we are inside a weekly level of demand. And let me just show you the level of demand once again on the weekly chart. Here we are with respect to this level of weekly demand. Now we have gone a little bit more deeper inside level as expected, and it is going to take some time for the price to react or come outside this level. What is going to be very, very interesting to see is whether this weekly level of demand holds or whether this weekly level of demand breaks to the downside. Right now, it seems like it is holding within this area over here. So any bounce from this level will first uh, travel towards 24,000. And if price does happen to close above 24,000, then we might even see higher levels coming inside the Nifty index. But in case if that does not happen and if price breaks below the weekly level of demand, then we could even see lower levels on the Nifty, and that will also put the index in a slightly little bit of a bearish momentum to the downside. So the market has already corrected nearly from 26,500 odd levels all the way to 23,400. So we are expecting to see that the market is going to be facing a little bit of a pause over here. And then from here on, we will see how the market shapes up in the days to come. Let's look at the Bank Nifty now. If you look at the Bank Nifty, again, comparatively a little stronger than the Nifty. Nifty is probably dragging down because of stocks such as Reliance, etc., which are also trying to push further down. But Bank Nifty is held pretty well, and probably pretty much it's also because of the likes of the heavyweights, where the banking stocks are holding onto this Bank Nifty level over here, which is going to be very, very interesting. So on the level of demand, 49,427, 48,961, this level is intact. And on the supply zone side, we have 52,806 to 53,256. So this is again going to create a little bit of a range bound market for the Bank Nifty in the days to come. Let's look at Nifty Financial Services. So Nifty Financial Services also more or less is behaving very, very similar to the Bank Nifty. We see a level of demand over here, 23,000. Prices did try to come closer to this level, now are holding on to this level of support. But we do have a lot of resistance to the upside. So first 23,500 and then 24,000, unless and until these levels cross, we may not see a big move coming up in the Nifty Financial Service. Let's move on to the next index, which is the MidCap Index. So MidCap Index is now more or less reacted nicely to that 125-minute supply, and now it's more or less taking a little bit of a pause here. Today is the MidCap expiry. So it'll be interesting to see, now from here on how the MidCap shapes up in the days to come, especially when it has created a little bit of a pause. So this pause might indicate that this could be a new drop-based drop straight into this level of demand, or this could also mean that probably markets want to take a little bit of a pause, and if Nifty rallies, Bank Nifty rallies, then probably MidCap will also try to push to the upside along with the other index. All right, let's move on to Sensex now. Sensex is also a little dibbly-dobbly as of now. So we had these levels of demand. Price gave a bounce once, price gave a bounce twice. Then we had a pierce of these levels here, both these levels. But what is interesting to see is that if you look at the weekly chart of Sensex and if you look at the weekly chart of Nifty, both are holding to their weekly levels. So who knows? This might be the potential turning point for the market. And if we go back to the daily chart, and if we put across the levels over here, more or less, it is taking a little bit of support at that weekly or the daily level within a weekly level. So any bounce from this level will again push the markets further to the upside. Key level of demand on Sensex 77,000 to 76,155. And of course, we have overhead supply zone, but they are a little far away from current market price. Let's look at Bankex. So Bankex very similar to the Bank Nifty. Currently, behaving in a very similar manner to the Bank Nifty. So on Bankex also we have this level of demand which is very similar to Bank Nifty. It's a little far away from current market price. Prices are consolidating here. So it'll be interesting to see if Bankex and Bank Nifty do take support and then start moving up. Are they going to take the Nifty along with them to the upside? The key levels of supply are 59,918 to 60,439, and on the demand side we have 56,258 to 55,680. All right. So now we are going to move on from the world of indices, and let's quickly have a look at the heavyweights. Let us first start with Reliance. A very key level on Reliance now is coming into play. In fact, it has already hit this key level of demand on the weekly chart, and it is now probably hovering around here. So it'll be interesting to see if from here Reliance does it help the Nifty to push to the upside. We are at a key level of support. 1250, 1240 are the key put open interest levels, and plus we have triggered a weekly level of demand. Now this is not going to be a small level of demand because it's a weekly level of demand. This is going to be considered to be a strong level. Any bounce from this level to the upside will indicate more buying pressure on all the indices across the board. 1350 to 1400 is the key level of supply, and 1246 to 1197 is the key level of demand on Reliance. Let's now move on from the world of Reliance to HDFC Bank. So let's quickly have a look at HDFC Bank. So HDFC Bank is behaving very similar to the Bank Nifty as well. It has gone on to hit 1780, 1800 odd levels, but from there on it has been sustaining a lot of selling pressure. What is going to be interesting to see is now from here on, what does HDFC Bank do? Whether it takes this support of this level of demand. We are now taking support also of this 1700 put open interest level, and price has managed to close above that today. So in case if Nifty starts to bounce, Bank Nifty starts to bounce, HDFC Bank might also bounce and push the banking sector further up. Key level or key resistance on HDFC will be 1750, the first, and then you have the 1800. So these are going to be the key levels for the indices and for the banking heavyweights. Now let's move on to the commodities. So let's look at the commodity markets now and quickly look at some of the important commodities. Let's start off with gold first, and then we'll move on to silver and other commodities. Let me load the chart of gold here. Commodities, gold, select the gold futures. Perfect. So here we are. Let me just remove all the tools here. Okay, perfect. So here we are on gold. We nicely came into this level of demand. Now we are seeing a nice rally coming along in gold. Key levels of supply on gold are first going to be this first rally based drop, and then you have this drop based drop. These are going to be the possible targets if anybody has gone long here. 73,578, 72,768, very key level of demand. Also a nice support of 74,000 put open interest, and the way gold moves, it seems like it's probably not going to stop again from moving to the upside. So 76,000, 77,000 absolute key levels on gold. Let's move on to silver now. If you look at silver, silver also has taken a little bit of a pause over here. Let's remove all the unwanted levels here. Now we do see a level of demand on silver very similar to that of the gold. The only difference is that the silver level has not yet triggered, but the gold level has triggered. We have key levels of supply on silver at around 94,200 to 96,000. 203 odd levels. This is going to be a key level of supply on silver. And of course, if prices do come down, then we might expect to see a bounce also coming up with a nice confluence of this open interest level, a whole number of 85,000 to 82,600 odd. So key levels to watch out on silver for the coming days to come. Let's move on to the next commodity. We are going to be looking at copper. So let's load copper. So on copper, prices have just been hovering between demand and supply. Now, once again, we are in a level of demand. We see a nice put open interest at close to around 790 levels, which is indicating that we might have one more spurt of a rally to the upside on copper. The key support levels are going to be 790, 780, 770 to the downside. And the key levels of resistances are going to be 810, 830, and 840 to the upside on copper. Let's have a look at crude oil now. So let's start with crude oil. So crude oil is holding on to last week's levels. Nothing much has changed. Rally base drop level 62.43 to 64.12, and we do have a level of support here at the bottom. Let's quickly mark it. So this is going to be a key area of we might expect to see a bounce here. Any break below this will probably create more bearishness in crude oil, but at the moment right now crude oil is nicely holding on to this level, and there's a lot of confluence of open interest levels within this level of demand. Key area on crude oil on the weekly, so 5224 to 4723, and the key area of resistances on crude oil will be 6850, 7350, and 7700. This is also going to be a key level of supply. Again, you have good open interest confluence over here, which is probably indicating that this could be potentially a turning point on crude if price does get there in the coming days or coming weeks. And last but not the least, let's quickly have a look at natural gas. So natural gas has been hovering inside this supply. What I expect with natural gas is that eventually if the supply zone is tested multiple times and it has already pierced more than 50%, then it's more likely that the prices are likely to push further to the upside. If the price does push to the upside and create a new high on natural gas, then the closest level of demand will be somewhere over here or somewhere over here where the price does break the level. But as of now, as long as the price is holding on to this tested level of supply, 250 to 62 is going to be a key level of supply, and to the downside 196 to 185 is going to be a key level of demand. All right, so pretty much this is it for this week. I hope you all enjoyed this week's analysis. If you do like our channel, hit the subscription button and do like our channel and post your valuable comments in the comment section. Wishing you all the very best for this week with respect to your trading, and see you all next week. Bye-bye. Take care.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.